Hey there traders, thanks for joining me for another free video from thestockbandit.com. I'm sure glad that you're here. So in this video, what I want to do is I want to discuss big gaps and how to treat them as a trader. So Monday's gap higher was a significant one for the market indices. The major averages gapped real big to the upside. So let's discuss that and see what we can learn from it, because the same principles are going to apply whether you're trading ETFs or futures that track the market indices, or if you're trading individual stocks that have similar types of gaps. Alright, so we're taking a look at the NASDAQ here. This is the intraday chart, and this big void right here on the chart is the gap that I'm referring to. So if you happen to be watching this video in a player, go ahead and select the highest resolution. That may be the 720p option, and then click the full screen. You'll get the best clarity here on the video. But this yellow line was the prior day's close. That was last Friday's close, and then we gapped completely up to here for the NASDAQ, and that's about a 2% gap. So, we saw that gap really hold its ground here in the opening minutes of the day. In fact, the dip that we saw just a few minutes after the open was only 3 points from the open. So that's hardly a dip at anything. So basically no attempt was made to fill this gap. We saw no selling pressure emerge, and that's a big deal, because anyone who wanted to short the strength never saw that make any headway, and instead the opening strength was built upon. So we saw it get added to as the market just continued to ramp higher even further. So here's the deal. Whether it's an index or it's an individual stock that happens to be in play with some kind of fresh news, if the gap is holding like we saw today right here, no attempt was made to sell it, don't try and fade it. And by fade it, what I mean is don't get in front of it and try and fight it. Just respect that gap and let it go. It's just maybe a day where you sit on your hands in terms of gap trades. Now, Monday's gap in the NASDAQ came on the heels of an already huge multi-day run. So taking a look here at the daily chart, we've seen a run off 22.98 all the way up to today's open at 25.22. So that's a huge move right there for the NASDAQ. So it comes on the heels of a huge move, and there were lots of people who were eager to short into it, and they never got paid. And that's another thing to always consider. What is the consensus here? What are lots of people trying to do that may get trapped on the wrong side? So this spurt higher was likely anyone who tried to short into these opening minutes where we kind of churned. Instead, we took out highs, and all those people that were trying to short were jumping on stocks, trying to buy them to cover their shorts and cut loose the pain, alongside any underinvested aggressive bulls who are simply putting cash to work. So if you're going to play for a gap fill, in this case you're looking to short the upside gap, what you need to do is you want to watch that gap for a little while, and if it holds, let's say 30 minutes, the odds are you're not going to see it fill on the same day. The time to initiate gap fill trades is when the gaps prove vulnerable pretty early in the session, or if you see them start to fill later on in the day, which again, today's afternoon pullback also never even approached those lows. So neither of those took place today. We never made an attempt early or late to fill that gap. So this was definitely the type of gap to pass on, no question about it. So trying to short into the strength on the way up would have really proven disastrous, because this market just was not ready to relent yet. So thanks again for joining me for this video. I will have more for you soon, but until then, trade like a bandit.